Hey everybody, Courtney Smith here, and I want to bring you up to date on the unfolding financial crisis that we have, and I want to give you advance notice before things get bad. And this is one of those little milestones that we need to keep an eye on. Struggling rental market could usher in next American housing crisis. This is from today's Wall Street Journal. Now, what happened is that we went into the COVID crisis. And there's been two responses that have held off any financial crisis. One of them is simply that the stimulus packages, such as the $1,200 that we all got, that money, a lot of it went to pay rents that people owed. In addition, many states passed laws that said that renters could not be evicted by landlords while the COVID crisis was on. So a period of months. We're coming to the end of these things, okay? The moratorium on evictions is coming to an end just as we get to wintertime. At the same time, our $1,200 is gone. So right now, there's no crisis. Let's take a look at some numbers here. A study of unemployed workers released last week by the Federal Reserve of Philadelphia said the outstanding rent debt would reach $7.2 billion before the close of 2020. Moody's Analytics estimates that it could reach nearly $70 billion by year end if there is no additional stimulus spending. The economic research firm calculated that 12.8 million Americans would owe an average of $5,400 from missed payments. Okay, so even $70 billion is not a lot of money. But what happens is this. Let's say I owe money to my landlord. Well, if I don't pay the rent and they can't evict me, then the landlord goes bankrupt. You got it? Okay, let's take scenario number 2. Let's say I get money and I can pay my landlord. Then everything is great. Okay, I've got a job or whatever. What if there's no stimulus? Well, then they're saying it could be $70 billion is owed. What are the chances of more stimulus before the end of the year? I don't think it's high. It's possible, certainly, but they could have, they've been arguing between 1.8 and 2.2 between the Democrats and the Republicans, and I'm going like, we could have split the difference at 2.0 6 weeks ago, and they're not doing it. So maybe after the election, they'll become all lovey-dovey and they'll come up with a deal. But let's assume the worst for a second, and they don't. So what'll happen then is that the economy, which is not opening anymore, we've kind of reached a flat spot here. What'll happen then is we'll start to see this $70 billion turn into $170 billion next year. We're going to see landlords go bankrupt. We're going to see people evicted from their houses. So there's going to be a bear market in rental housing. There's a bull market in owner-occupied housing right now, but there is going to be, and it's already started, a bear market in rental properties, particularly in places like San Francisco and New York City, where rents have dropped by 30% and 20% respectively in just a few months. So that trend is going to continue. So this is not a problem from a global perspective. Obviously, if you're a person who can't make your rent, or if you're a landlord with a building which is costing you money but not receiving any money, both of those people are in trouble right now. But when we look at it from a society-wide basis, $7 billion is a peanut, and even $70 billion is not that much. The problem is the cascading effect if it continues to go on. So if the landlord can't collect money because of a state law, then the landlord goes bankrupt and defaults on their loans to the banks. The banks then get a bailout from the Fed. Do you see what's going on here? But who takes over the rental property? Well, the bank does. And then the bank, what do? They sell it as quickly as possible, creating a bear market in multifamily dwellings. So right now, not a problem, but you can start to see linkages that could lead to problems next year. All right, everybody, we'll talk to you later.